Yeah, Adam, welcome back, buddy. How are you?
He's muted.
You're muted, buddy. How about now? You good?
He's unmuted on the system here, but I think his input source. There you go. There you go.
There we go. Good now.
Adam, yeah. How are you?
Doing good. Doing good. Big day.
Yeah. Sound better like you're over that cold. I was thinking about you. I was thinking about you yesterday when gold started to sell off. And, we were talking last week about it. And maybe we could go over that again, that seasonally, it's one of the better trades. Why don't you tell the
I can't. I mean, we look at the seasonals every month, and I feel like over the last, we've probably been talking 7 or 8 years now, Dale. Over that time, you see so much more talk about seasonals in markets. And, I think instinctively when people see seasonals, they think, well, this shouldn't work. It's nonsense. I mean, if it's out there, everybody would know it would price in. But it works. And you see it time and time again. And I think
when did you start looking at them?
It was a lot of bond guys started talking about it.
Because I learned from Jake Bernstein made it popular.
I really respected it. It was Ian Lingen, and who is the guy he was with it? I forget the names or not. Look at that. They're not even giving them credit. And they were, these were really smart guys, right? And they said, listen, you got to keep an eye on the seasonals. And so we started to apply to F.A.C.E, and you would see, over time, it would work. And the single best seasonal trade that I know is gold, or that I've traded anyway, is gold from December through January, and into February. And you kind of put some shoulders on each of that. And then you can see some of the strength in November, because I think people are front running it, just building up over the last few years. And the way I'd like to go at that right now, anyway, given the setup in the market, is wait for some sort of pullback in gold here in November, and hop on it. Now, how much that is really the art of trading, or whatever else is going on. Maybe the Fed is dovish today, and we missed the boat a little bit. But that, I think, is one of the big things that I'm looking for in November.
Okay, well, we're starting to test some technical levels here, Adam. Is your view that, and I know a lot of people turn bearish under 1720, that's our big level. Of course, 1680 is very huge. I'm thinking that we hold above this low would be the most constructive, maybe 740-ish or 1740-ish. What are your expectations from the Fed? Perhaps, everyone's saying that they might be hawkish, but, Blake was talking about how they telegraph. And last night, I saw Biden bringing up nominations of Fed officials, at a climate change conference. Signal. He's not like President Trump that is going to threaten to fire Powell. But, why bring up Fed members? Was that a cryptic way of saying, take it easy on the taper? Biden might be worried about it.
I'm not sure on the context as well. Maybe it was just asked and answered. But, for me, this Fed, it's so well laid out. It's like the best laid plans of mice and men, right? Robbie Burns. They have teed this up for so long. And it's because, one of the things we often talk about is generals always fight the last war. And the war they've been fighting is the taper tantrum, right? They've been scared of those two words now for 8 months. And, I don't think the market was ever going to get worked out about the taper, because the market had seen the taper tantrum before. So everybody had seen it. But they telegraphed in everything all the way along to get to this point today, where they could say it's going to be $15 billion. It's going to run off middle of the next year. And this is, we've told you about this, and now we're just going to execute. This should be so simple. But here we are on the day of, the market's pricing in more than that in terms of rate hikes in June before they should even be done. And the Fed has to say, oh no, should we up this to 20 billion? Should we put in some extra flexibility that we really don't want to have? I think they just come out and stick to the plan today. You know, the market isn't screaming that they have to do something today, even if maybe they should in a few months. I believe the doves still think that inflation is transitory and the jury's still out. So I think it ends up being something very simple today in terms of, yes, it's 15 billion. Yes, we start to taper this month. And it really should be that vanilla. The market reaction, on the other hand, you know, we've seen Aussie, Euro, Canadian dollar in the past week on central bank decisions make some pretty wild moves that were largely counterintuitive. So, I mean, strap in.
Yeah. So, you know, it's interesting. You bring up what's happening there. I know that you're a long-term oil bull, and you and I talked, and I said, you know, potential correction. Is this enough to get you interested here? And what do you think OPEC's going to do? What kind of impact it'll have on the market? Are they going to be generous? And, you know, we get some type of sell-off to 76 here, Adam?
You know, I've followed it closely. There's no signs. There would be signs, I think, by now, or at least today, that we're going to see something tomorrow in terms of a surprise. Again, OPEC really laid this out so nicely. If they start to crack now, there are some members, UAE in particular, that would just like to pump more right now. So if you start dabbling, then you know, then the sort of knives come out in every direction and you've got to fight a whole new war. They laid this out. I mean, ultimately they want high prices. I don't think they're too worried about the US, because they can say to the US, pump your own oil. You know, you're 2 million barrels a day below where you were. So don't look to us.
Yeah, because they flooded the market and put the frackers out of business.
Well, I would say
that great market. Wasn't that a great marketing move?
I would say that Wall Street flooded money into the frackers, who were promising $20 a barrel profitability in oil. And then, you know, 10 years later, they're still not making money at $65 a barrel. And Wall Street says, listen, time's up. There's no more cheap money coming your way. You got to make money. And the stock market, like, ultimately, I think
we did have a negative reading in oil during peak production. You know, so I mean, oil was under pressure, and it wasn't just from fracking.
Well, I mean, America added pretty much all the marginal barrels in the last 10 years into the oil market. So it's tough to blame OPEC for that. You know, I mean, you go from 7 million to 13 million barrels a day. That's American oil, not OPEC. But okay, here's the long-term trade in oil. I think oil continues to go up until oil stocks go up dramatically. Because right now you had Diamondback Energy, that was pretty much the biggest fracker, one of them anyway, yesterday come out and say, listen, we're not drilling more. We'll drill our inventory and we'll keep production flat. But our stock's trading at, you know, 8 times, say, EV to EBITDA. And it's the same pretty much world over. There's just extraordinarily depressed multiples in oil because they're priced as if oil's going away. So they're all saying, listen, we're not drilling more. And this is almost universal. And this, I think what we talked about last month, waiting for earnings, and the message that they're not drilling more. Now, OPEC has 2 million barrels per day of spare capacity, but that's going to be eaten up by the market, by the reopening. So at that point, unless oil company shares have doubled and you start to stretch those multiples and they have to find new paths towards profitability, they're not going to drill, and there will be no new oil. I mean, maybe the explorers start to come on in time, but I think that's really, so oil will continue to go up. You know, in terms of the tactical trade where you're at, you know, we had 10 weeks in a row, more or less, 9 or 10 weeks in a row of straight up for oil. And you would expect any sort of spec to dial it back along the way. And we saw that, I think, last week. Prices came down. You get these $1, $2, $3 drops, and they were just bid right back up. To me, that looks like real money, because it's just too small of a dip for a spec to be buying unless you're extremely bullish.
You know, to your point, huge underperformance. This is an ETF of oil, OIH, and you know, WTI took out the commensurate high here, and OIH did not. So they've really been lagging in performance. I mean, you know, based on price, not bad, almost a triple from where we were late last year. So
Yeah, I mean, if
they
you just
have
look at
been
the
getting
drill
a
counts,
little love.
they're never going to drill like they did. I mean, there's more efficiency, and now they have cost pressures, right? I think it's hurting the servicers because there's cost pressures everywhere. And they built a lot of extra capacity. Although some of that, you'd argue is rusting, but that might be the case everywhere. So I'm extremely bullish still on oil after this run. I mean, we had Bank of America talking about, I think, 120 Brent by the middle of next year. Natty might be a bit different story. Speaking of seasonals, we're at the peaks of seasonals for natural gas right around now. So I'd be a little bit more wary about that.
Yeah, look at that.
Not
move.
to say it's a weather trade from here. I mean, if it's cold,
Yeah.
it goes up. If it's not, it goes down. So
what's it like there? What's it like where you are at today, Adam? What's the temperature? You have any snow?
Nice. It's nice. I know there's that cold working its way through kind of Chicago area and then down.
That's why I left.
Oh yeah. How's weather where you are?
It'll be about 75 today.
Beautiful every day.
There might be a cloud or two in the sky.
It's actually pretty nice.
Not bad. Today. Not bad. As long as there's no, earthquakes, we're great here in California. Or brownouts or wildfires, it's nirvana. So I want to ask you about the dollar, Adam. So I believe the dollar has so much impact on everything. It's kind of like the fulcrum of everything, and people keep looking for the dollar to peak. I still think there are a lot of dollar bears out there. To me, this 93.5 has been a real important area. We had this false breakdown last week under 3.5 and came back Friday back above it. Looks like the path of least resistance is higher here.
Yeah, I mean, what I'm really thinking about a lot right now is that the bond market response that we saw last week. It was like a sea change, really, and not necessarily intense, but in Australia at the front end, German bonds, Canada, really the front end blew up in terms of yield. UK
yields went higher everywhere there.
Yeah, and they were these spike moves, and then you saw treasuries getting whipped around.
But the treasuries was that why there was a rally in the treasury market because of what was happening globally? Because yields came down.
Relative value trades out there, and there were talk. I think I mentioned it when I last spoke with you about firms blowing up, and I think I've heard more evidence of that. Maybe it's a little bit exaggerated because I don't think any of these firms were big enough, or any of these trades were big enough to really roil it. But when it gets out there, I think a lot of people were in the same trades, and it just went too far too fast, and I think it's got a lot of people off balance right now. But it might still, that just might be that, speaking of earthquakes, might be like the tremor before the aftershock. Well, however it works with earthquakes, big one.
Well, you think that's a pin that eventually pops the whole bubble, Adam? Is a huge bear market in the bonds. Bonds.
And maybe it is today on the Fed. Maybe I have underestimated the taper tantrum possibility. And I think at some point, though, you just held this down so long, like a balloon underwater, and that's what we saw in Canada and Australia and the UK. The way that popped was disorderly, and that's not what you want to see at this point. And if this inflation tailwind ramps and ramps and ramps, then that pressure just sort of grows. It's like you're holding it underwater and the balloon is getting bigger, that the balloon is inflating underwater, and eventually the Fed is sort of trying to raise it up slowly, but
talking about balloons, at every dip in the S&Ps has been like a beach ball underwater. Pretty stretched here, Adam. Someone asked me, and we were talking about it here in F.A.C.E about Blake was listening to podcasts about crypto and NFTs and everything. And someone asked me, Dale, do you think this is comparable to the early 2000.com? They brought up pets.com. And I said, comparable to, say, that was a 2.0 on the Richter scale. And what we have going on now is like a 10. I've been around a while, and I've never seen this type of rampant speculation and bull markets and so many things. There are things I don't even know what they are. NFT, I thought that was a typo for the NFP was going to be out. So, don't you feel the same way? I mean, it's all been fed by cheap money, and if things are going to change even for a while, that there could be some give back of inflated asset prices.
Yeah, I mean, and if you think about it in the big picture, it makes sense, right? Like the early 2000s, late 90s were the entrance of retail as a force in markets, right? Plus you also had, I mean, the internet, which is a massive technological change. Now, I mean, the pace of technological change is arguably just as high and the companies are making money. And two, you have an explosion in retail access. Not, in the late 90s, it was sort of one segment of Generation X that was getting in, and here and there. And I feel now it's everybody, and it's
Blake's son trades at school.
It's the dumbest money possible. Not
Blake's son, but because he's up 15%. But the kids are trading at school.
Yeah, I was saying yesterday the correlation of meme coin ownership and face tattoos is 1-to-1, and they're making money. But
hey guys, and good morning, Adam. How are you?
I'm doing great.
Dale had mentioned my son, and I'm sitting here. I was just tweeting a couple things, writing some things, and you were talking about the markets and just it's the everything rally. And it's funny when my 14-year-old son, my youngest one, he looks at me, he's like, Dad, just buy stocks. Everything's going up. It's scary, right? When this is a 14-year-old kid.
Adam's kids are too young to tell him what to do in the market.
And there's a kid around the street from me. It had $400. It was a trade. I mean, if anybody made $250,000 in 4 hours on a $400 trade, like just in this insane. It was when oil was going negative around that time, so the volatility was insane. But for the example, for all his friends, he was 19 or 18 at the time. You see these people getting rich, and then you see other people going to work for whatever it is, $15
$10 an hour. Yeah.
And you just look like a sucker, right?
Yeah.
And you wonder if that's the message coming out of all this. I mean, obviously it ends in tears at some point, but
it does. And I think that's a great point. I'll let you guys continue on, but that's the point. Like I'm a parent trying to teach my 14-year-old kid, like, hey, let's, you got to pick up some poop because, I'm going to pay you $5 to pick up the poop around the yard. And he's like, yeah, no, thank you.
Yeah.
So anyway, I'm going to leave it with that. You guys continue on. Hello, Adam, and good to have you, man. All
right, Blake. So anyway, how challenging to be a parent in this type of environment. To
bring it back to stocks. I read something today. There's been 7 years where the S&P 500 has been up 20% year to date at the start of November. It's rallied through year end every single time. After that, I think the average is 6% to go. That looks like a nice consolidation to me. I mean, it's a small dip, but there was at least something there. And you just take it through year end. The Fed probably teased it up today. It says 15 billion. Leave me alone. We'll talk to you in June when it's done. And then why wouldn't you buy stocks on that, right?
Yeah. I'm just a little swing trade. I'm thinking 47.40-ish by year end. And I think
sure. That's totally doable. 47.4, 4,800.
And then 26 by April.
Yeah, I wonder if early January you have some serious capital gains sort of issues around a lot of this that start to see the market. So
when you think, Adam, that everyone knows taxes are going up. I mean, even though they floated a trial balloon that got shot down, this administration wanted to tax unrealized gains. Can you imagine what that would do to the market? Who would ever hold an unrealized gain that could disappear? You get taxed on it, and then it disappears in a few months.
Yeah, well, I mean,
there's going to be some
tax policies beyond me, but
yeah.
I mean, ultimately, it's the Tina trade. There's still no alternative to holding stocks. So if I imagine a world where you could get 6% in bonds. There'd be a lot of people. A lot of people would be happy to take that rather than than, you know, whatever it is they're getting now.
Yeah.
But how far are we away from that? I mean, it would crush the market.
All right. So continued melt up. Gold's accommodating you down $11. Give me a little ping when you're going in there, buddy.
Okay.
And always appreciate you being here. Any want to wrap it with the loonie? Is that a pretty important area here?
Yeah, I mean,
looks like it's carving out a higher low.
I believe there's a beautiful head and shoulders there targeting 120. But if you look at the last week, we had a Bank of Canada to turn it around. Bank of Canada came up pretty hawkish. Oil, you know, sitting right at the highs, made new highs I think last week. Commodities doing pretty well everywhere. Risk trade doing very well, and it just couldn't get going. You know, and some of that might be that the bond skew, right? That might be clouding the picture. It was end of month as well. But I worry when something can rally on good news like that, that it needs to take a little bit of a break. So, you know, it has so far this week.
I'd love to buy it at 22, 78.6 back, right there.
I mean, I think I'd like to sell it at 20, closer to 25.
I think you're going to get that.
For a ride. I mean, like I said, if I miss it, I miss it. You know, if it starts to go south, we could ride it down. Same as gold. I mean, if the dip doesn't come, well, I'll catch it next year. There's always another trade. That's what I often say, and I think that's my philosophy in trading is that I mean, the worst thing you can do is kind of FOMO a trade or
impulse.
Well, you just revenge trade it. I mean, all those things come from, you know, sometimes you watch a trade for a year, right, Dale, and then miss it. I mean, we're watching the Russell right now. We mentioned that last time. Looked like it was perking up above the top, but then you see, well, Avis is now the biggest component. It kind of memed out, and AMC going as well. Is this the kind of fundamental breakout in value we're looking for?
Yeah, the trash is the last to dash.
All that's scary. I mean, it's scary. It really is. But it's like you got to dance while the music's playing.
Yeah, and
you know, when we all look back at this, when it does go south, we'll say, "Oh, that, you know, it was Hertz rally. That was the it was the clue that it would go, or whatever, Shiba Inu or Dogecoin or something." But you know, there's one every week, so it's bound to be one of them eventually.
Yeah. Anyway, a broken clock is right twice a day. Are you talking about my analysis?
Get out of here.
All right. From one journalist to another, Adam. Anything new at Forex Live? I see you guys are doing education.
We're doing some of that. We'll have more of that. We got a little section on that. I mean, for new traders who are here, I mean, everything's free there. Check it out. We've got a great community. It's very supportive. We'll bring you along on the fundamental side. You know, days like today, though, are what we do. I mean, it's a Fed decision. We're analyzing things in real time, setting things up in real time. I mean, we're not waiting till, you know, 2 days later to tell you what happened. It's what's happening now, what we think is happening next, why it's happening, what to look out for. You know, the time between the announcement and the press conference. I mean, there's no one doing that kind of strategy. So check us out and see if we can steer you along or offer a little bit of tidbit that gets you over the top.
Okay, one of the best news advisor, analysts, traders I know, Adam Button. Thank you so much, my trading warrior brother, for I feel lucky I got to talk to you a couple weeks in a row. All right. Good hunting today, Adam.
Yeah, big day.
And good luck to you and everyone who reads your stuff and follows your stuff. I hope pips rain down on you guys that you need an umbrella today.
Beautiful. Thanks so much for having me, Blake and Dale, and everybody here. And
all right.
Should be live.
All right. See you, Adam.
Thanks for joining us, Adam.
So that's a wrap, everyone. And Adam Button at FX_Button and at Forex Live. And you could join the team in 18 minutes for the morning edge for more prep on what to do with the Fed. We're getting some alerts here on cable. Cable's really popping here. So good luck today, everyone. I think that everyone has some ideas, and we'll see you tomorrow. Don't just count your pips, count your blessings. And I know my hair looks like we're still in a pandemic. So see if I could do something about that this weekend. Maybe I'll make a few pips and I could get a haircut. What do you guys think? So good luck. And today be a great day hey, today be a great day to sign up for ForexAnalytix and be in the chat room and, you know, see what they really do. Because really F.A.C.E is just a tip of the iceberg. You're very welcome, everyone. Good hunting. I'm pumped. I'm ready. I'll see you guys tomorrow.
See you, Coach.
All right. All right. Thanks a lot, Blake. Good luck
Thank you,
today.
sir.
Adios.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.